then it's easy to go in and see what I'm showing you here. It's not just simply, oh, it's a overbought situation in a bearish market. No, it's not. Because you can go back and look at situations like this, and it may not be in a market maker sell model. It might be in something entirely different. And that might not be a trade idea that you would gravitate to. In that instance, it's a trade that you would just simply let go, and you're not going to be upset about because it doesn't fit the criterion that is placed in your hands in this mentorship. So when I teach like this, all it's going to do is get your gears turning about how you want to be a Model 6 and Model 7 trader. And that's fine. I just don't want to twist your arm and make you think that that's the only thing, and if it doesn't work for you, that you feel deflated and lost because it didn't work for you. This is the reason why I tell you, try all of the price action models. You get 12 of them, okay? The first one is easy money. It's like easy, like really easy. Like you literally can quit your job if you've gone through mentorship, really digested everything, and you have a complete understanding of everything I've taught, and you submit yourself to that. In 6 months, you could be consistently profitable, apply sound money management, give yourself some time to grow it, or I guess get a funded account to support yourself. You don't need a job. And I mean that wholeheartedly. That's not a selling thing because you already paid me, okay? I'm not trying to sell you. I don't need to sell you, okay? You see I can do this. And there's students in this groups that can do it too. They're getting funded. They're doing it with their own funds. It's something you can do. But the problem for most of you is you're putting these barriers that are really not barriers. They're just things that you're hung up on. And you're placing them right in front of you and saying, I need to learn this or I'm never going to go forward. I need to have this. No, you don't. You don't. Those mountains you're forming yourself. If you feel stuck, that's what your journal's for. I have a concern about this being an impediment on my learning. I don't need to have the answer right now, but this is what I feel like I need to have answered over the course of my development. You hear what I just said there? You acknowledge that you have something that is feeling like a barrier right now, but you're giving yourself permission to not require the solution to that at this very moment. So you divert your attention from that and you go into the next lesson. And you're going to find by doing it like that properly, with real good note taking, and then watching it again to draw out the things you may have missed the first time. By doing that, you're going to find that those questions you write down, which is what I tell you before you even join the mentorship, you're going to have to use a trade journal. If you don't use a trade journal, you're not going to develop. You're not. And everybody that has said, I'm not going to do a trade journal, I said, it's stupid. Or I don't know how to really do one because I don't have one like ICTs. It feels like it's waste. I don't have time to do this. Well, your results are going to speak for itself. Because every single person that's done very, very well here are one that submit to journaling. Because you're not going to disarm yourself emotionally, psychologically without doing that. And what do I mean by that? You're going to remove this plague of problems that you're creating for yourself by placing them in your journal. You're acknowledging that these are real concerns for you. But you're also giving yourself permission to not need to have that answer right now. And you're writing that out. And what that does, it places that forgiveness in your subconscious. And it allows you to let go of that problem. That it's like, well, it was exactly like it was before I had the surgery. I was nervous about being put under. I didn't want to go under. And had never having been put under anesthesia, I was worrying, and I couldn't do anything the night anesthesia. I was worrying, and I couldn't do anything the night before. I was going to do a video. I couldn't do it. I could not do anything. My wife wanted to have a conversation with me. My kids wanted to talk to me. I wanted to do something with you guys. I couldn't do it. I'm completely just consumed by it. That's what you're doing with things as you're learning here. Okay, I need to learn how to get the right order block. No, you don't. You don't need to know that right now because that'll come over time. But you're obsessively worrying about something that, well, I had to have the surgery. Okay, that had to happen. I had to be put to sleep to go through it. You don't have to worry about that thing that you are increasing so high that it's obsessively worrying you. You don't need that in here. The way you disarm yourself from that is you put it in your journal, you acknowledge it, and you go on to the new next topic. And then as you go through supportive studies, because they all interlock, you don't appreciate that yet because you haven't been to charter level. You haven't gone through all the lessons and you haven't seen enough commentaries and you haven't listened to how all these things are drawn together for you to, well, appreciate that perception and perspective that will be given to you because of the time element. Not, oh, I need you to make all your payments to me. I need your money. Okay. No, you have to go through this. This is the way it is. You're not going to get this real quick. So the whole entire process is designed for you to have every advantage. And I teach you how to navigate all of these psychological barriers that you create for yourself. But if you choose not to do them, don't blame me and don't blame the concepts if you don't have the results you're looking for. You aren't doing what it is you're supposed to be doing. And I have had so many students come in here, swear up and down, oh, well, I'm really trying. You might be trying to watch videos, but are you doing everything every single day that you're supposed to be doing? Are you back testing? Are you studying? Are you looking at how much it moved, where it moved? When did it begin to move? What did it reach for? What was the draw on liquidity? What was the higher time frame buy? There's so many things that you have to do repetitively that feels redundant in the beginning because you don't know the benefits of doing it. It just feels like I'm giving you time-wasting drills and just walking you down the primrose lane as long as you keep making payments. That's what some of you think. When all I'm trying to do is push you through 12 months of basic training. And if you don't have the discipline to do things I'm telling you to do, I can't go to your house and make you do them. I can't make you go into your journal and journal all these things. Okay? I can't make you do those things. You have to have the discipline to do that personally. If you don't blame me. Don't blame these concepts. Don't blame the logic for your failure because you are the person that's the reason why it's not happening. You are the reason why it's taking as long as it's taking because you're wrestling internally with these things that you're worrying about the wrong things and not concerning yourself with the right things. And the perfect example is everyone that rushed through 2021 with accelerated payments. I know some of you want to say, oh, but you gave us the opportunity, so it's your fault. And some of you are literally thinking that right now. And you're smiling right now because you're thinking, oh, I was. But that's not true. I gave you the option to do it because if you want to do it, and I know some of you do, but just understand that you should not rush through it. If you want to get through all the administrative side of it and just have access to the content, great. It helps us with bottlenecking. And it has done a great deal of reducing all that from the administrative side. But I think I got 4 or 5 people from the 21 group, as I mentioned earlier, that are mentioning in their own little thread they're creating on the forum, which to me is just unfortunate because I said this is what's going to happen if you rush through. You're going to get to the end of all the core content, and now you're a charter member, and it's going to feel like, I don't know what I thought I was going to know. Whose fault is that? It's not mine. It's not for a lack of trying and teaching because I gave you tons of content and drills and things to do and what to look for. And then the weekly commentaries, I'm telling you what I think is going to happen, where it's going to draw to. So you have every advantage except for me telling you to get in and get out and telling you what to buy and what to sell, how much, what's the leverage, and where's your stop. That's the part everybody wants. I'm never going to do that. You knew that before you got in here. But you have every advantage in learning how to do this properly if you submit to it. But all of you that come in here all think you're going to be that crackerjack that says, well, I'm just going to do it my way and then I'm going to surprise and I can figure it out. easier because I'm smart. I don't need to have to watch these long videos. Just give me the short Cliff Notes version. Man, it doesn't work like that. It doesn't work like that. I've never had a student, not one time, not in YouTube or in this mentorship, say I'm consistently profitable because I took shortcuts. Never, ever, ever happens. It's never happened. Okay? The folks that have got to that point of consistency and they don't feel that rush that I gotta know what I'm looking for every 5 minutes, those individuals have submitted to everything I said. They took it to heart. They trusted my guidance. They trusted my mentorship and my experience, and they put it to task. They are the ones that are doing well. That's just it. And it's not surprising because that's exactly what I told those individuals was going to happen if they did it. Now, have some done very good work and have study ethic that is equal to those individuals that are successful now? Have they done that type of thing and have not yet found consistency or their unique model? Absolutely. Some of them are in the 2016 group. But again, the question is, how is it that 2016 members are either funded or trading their own money and they're consistent? In that same group, how is it that those individuals can do it? And there are some that just simply can't trade themselves out of a wet paper bag. And I don't mean that to be derogatory. I'm not making light of it or making fun of you. But my question is, what separates you? What separates you two groups? The profitable from 2016 and the unprofitable that feel lost. I can't answer that. I don't know what you're wrestling with. I don't know if you really did. You might think you did all those things. You might say, well, I did it. And you may not have really done it. That's a possibility. But until you submit entirely to this whole process, your results are going to vary regardless. But you should not be surprised if you've taken shortcuts along the way and if you don't feel absolutely confident about what it is you're looking for, how you're going to engage, what you're looking for in the marketplace to see setups form and why they should be forming and where it should draw to. You got to question, is what you've done thus far been wasted effort on your part, not mine? It's something that other people in here, and it's not a little bit of people. I have successful people here. But I do acknowledge, and I've said this repeatedly publicly and in here, I have some students in 2016 that literally cannot trade. Period. They can't do it. And for some of them, it may be they never will. And that's a reality. And that might require someone like them going outside of mentorship and saying, okay, let me try something else. And maybe they require something that's automated, something that is, mechanical, where it doesn't require their personal interpretation. They just, okay, this says I got to do this. This says I got to do that. Maybe you are predisposed to work with something like that. And if you use sound money management, then whatever, that's great. Or you may try that and say, man, I ain't never going to deal with this. And then you come back to this and you go through the whole process again. I don't want to go through that. No, by the way, I'm not going to do that. Well, what are you going to do then? You made the investment. It's not that the stuff doesn't work because people here use it. I use it. You see it. So I know this is probably uncomfortable, especially if you're in this group. And maybe you're in 2019 and you fit this description. You just can't find your footing and you don't know what it is you're trying to do. I can imagine how frustrating that is, but I've been there. It was 6 years, folks. 6 years of nobody telling me to continue. So once I stripped it down and I started seeing this pattern, that was my go-to. That was my bread and butter. That was the thing that I worked with the majority of the time. And then when these don't form, I'm using the other things that I teach you. Simple order blocks, optimal trade entries, short-term little moves. And then I load up. And here's for the notes, okay? I load up on these redistribution and sell models and reaccumulations on the buy models. That's where I load the boat. That's where I push maximum leverage. Maximum. Because I know I have a lead pipe cinch trade. Am I likely to fail? Probably not. I trust everything that's going on in the marketplace and I'm going in full bore. Do I lose sometimes like that? Absolutely. I've lost trades doing that. But I'm not demoralized if I do, because I know this pattern repeats. And if I see it again, I'll trust it and I'll still do max leverage. This is not to say when you think you see it to use max leverage or 4.5% risk on your trade. Don't do that. Okay, I'm not saying that. I'm teaching you how I interpret it and why you see me doing 4.5%. 4.5%, not 5. 4.5% is my maximum leverage. But when you see me forcing, the highest leverage on a trade, it's on this framework. And this framework could be inside of a 1-minute chart, inside of the range of a 1-hour chart, or candlestick rather. Think about that. In 1-hour candle, if the range allows for that type of market maker structure, and the bias I'm looking for is likely to occur, I can trade in that 60-minute candle with a 1-minute chart, trading with that second level of redistribution if I'm bearish. And churn it. It's a beautiful thing, folks, once you understand it. But you have to know everything and be familiar with everything I teach you here. And what about seasonal tendencies? How's this fit in there? Well, if you know that the seasonal tendency is likely to create the bearish environment, then you wait for the structure to get in sync. Then wait for the market maker model to be in sync with that seasonal tendency and market structure. Then wait for the second level of redistribution if you're bearish, or second level of reaccumulation if you're bullish. That's your unicorn. That's your thing that ICT constantly looks for. That is not Enigma. Okay? This is just my bread and butter pattern. Enigma is something entirely different. It's not even a chart. But for charting patterns' sake, this is that thing. This is the thing that I teach you that you can see, that my children hopefully will grow into understanding how to see. And if they do, then they don't need to work the rest of their life. I make my children work jobs because they didn't want to learn this. And if you think that makes me a terrible father, whatever, you're entitled to your own opinion. But I will not lay money in their hands if they don't put effort into this. I don't care if they just make $30,000, $40,000 a year. That's fine. I'm not asking them to get rich. I'm not expecting them to get rich. But I'm expecting them to learn this because that's what this mentorship is for. It's not for you. It's for them. You're just paying for a seat in the house and the right to observe. I'm speaking to them. That's who I'm talking to. And the reason why it feels like I'm talking directly to you is because I'm being sincere with the image of my children in my mind. And it's easy for you to receive that like I'm speaking directly to you. Because I want them to feel I'm talking to them, because I am. And that's the benefit of being here. I'm teaching through love. I'm not teaching through pride and arrogance. That's the difference between ICT here and ICT on YouTube. So, anyway, I covered a lot of stuff here. And I, in my opinion, condensed the entire mentorship in a conversation that is only meaningful to someone that has been here for a couple years. And if you don't feel that, it's because you're Group 21. You don't have everything in your hands yet. You haven't done enough of the work that I teach you to do. And you just don't have the experience yet. But I promise you, okay, in your notes, write this date and this recording down, okay? Because this is one that you should listen to twice a year. And you can pick when you want to watch it, but at least 2 times a year, once in the spring, once in the fall. Okay, there it is. Cycle through this one each year. And you're going to find that what I'm saying in this video is going to be much more meaningful, and you'll understand really what I'm saying as more time goes by being with me. It's going to seem like I made a different video. So when you download this, as you should be, you're going to swear that I got into your computer and I added something extra when I didn't. You just are worrying about everything else. I'll say this before I continue. I did a magic trick in the Illusion of Choice SoundCloud, and I put that same video or audio on a video on my YouTube channel. And it's an exercise in priming. The listener feels like they have a complete and wide choice of things when it's a predetermined outcome. I have 2 outcomes that I'm delivering. You don't feel it happening, but I'm manipulating your perception, just like a market maker does in these charts. That illusion of choice and the things that your attention is being held on prevents you from seeing the forced outcome. That same phenomenon is what you in here are doing to yourself if you're struggling still and you've been here for years. You're putting the concern at an elevated level on things that have been proven to be barriers for you because you make them barriers. You need to lay it down, go back through the content, not thinking about you needing to figure that part out. Because you're obsessively thinking about that thing and it's holding your attention. So why is it a surprise that anything I teach you beyond what you've learned up to that point that's a sticking point for you, why are you surprised that you can't learn past that? Because I'm not holding you back. I'm not withholding any new content or teaching. Obviously, this lesson here is gold. But it's not going to be gold to a new student. It's not going to... If I put this on YouTube, I could literally take this video and load it to YouTube tonight. And they'd be saying, this is a long, boring video. But for folks that have been here for a while, and they're familiar with the market maker sell model and buy model, and they're familiar with market structure, they're familiar with the draw and liquidity, they are familiar with the weekly range phenomenon. Out of another 21 group member, let me hold that thought for a second. If I'm not mistaken, I think it was a 21, but I think now thinking about it, it's a 20 member. Don't quote me on that, but I did mention, I talked to them on their thread today, and they were making a point about why was I concerned about mentioning it's Tuesday in a particular trade idea. That was flabbergasting to me. And don't be offended if you're the person, okay? I'm just stating that everybody knows that on bearish and bullish weekly profiles, Tuesday is 70% likely to create the high of the week when it's bearish or the low of the week when it's bullish. So Tuesday is very significant. So why anybody would ask why Tuesday is even mentioned in my observations and in my annotations and commentaries, to me is astonishing. Like, that's something that I teach on my YouTube channel. So to me, again, these are those types of things that are glaring, obvious, bulletin points, okay, that scream that this is somebody that didn't really go through the content well, didn't take proper notes, and was worried about other things instead of the lessons individually, and drawing out the insight from each individual lesson, which will build on your complete understanding over the time of the mentorship's 12 months core content, and then what you get in charter. So it's frustrating for me as a mentor, because if I tell you before you even begin how to go through this mentorship, and then as you come in the first month, I give you a lesson on how to do journaling. And then I talk about in the commentary, this is what you should be writing down right now. I draw special attention to things that you should be taking down as a note. And things repeat over and over again, which is very boring. And it makes the videos boring because you've heard me say certain things over and over and over again. You got it. I heard it, Michael. Come on. You want to be buying below the opening price when it's bullish. It's power 3. Blah, 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 blah. We heard it. We heard it. But what are you doing with it? Are you applying it? How many times have you applied it in the past 4 weeks? How often are you applying it in the last 3 months of a quarter? There's trades forming all the time with it. How many have you taken? How many have you engaged with? You might understand something, like if I teach you a magic trick with cards, I show you a trick. Oh, that's really neat. Can you show me how that works? Yeah, I'll show you. Here it is. Then you walk away thinking, well, it's not so magical. Now I know how the trick works. But you can't perform the trick. So it gives you a false sense of, well, I know how it works. So I'm not impressed. Then you have the other folks that want to learn how the trick is done. And they think they know how to do it. And they go out there and try to perform the trick. And they just completely botch it all up. And then because they can't do it, they'll say, well, it's a stupid trick anyway. And that guy that showed me that trick over at ICT, he's just a scammer. So it's not hard to understand how the mental, wrestling match, pans out. It's all in the personality of the person and how they conduct themselves as a student. The responsibility is on you. It's not on me. I'm literally laying this stuff in your lap. Every single time I talk to you, I'm laying it in your lap with the understanding that you knew before you came here that this is going to take a lot of work. And some of you were surprised. Some of them were so surprised they quit. They're gone. So I get it. But understanding that market maker model and what the importance is, like I don't teach that aspect of the market maker models on YouTube, but the overall structure is there for people to study and discover on their own. Now, that's not to diminish the importance of all the other factors of that fractal, because each one of them are useful. I prefer that second leg of redistribution when it's bearish or second leg of reaccumulation when it's bullish. That's the pattern I'm looking for. Like I could be doing 1,000 different things. If I know my bias is bullish for a particular market, I'm going to go in London or I'm going to go in New York and see if it offers me that pattern. If it's not there, I'm not probably going to do anything unless I'm really trying to show off and do something else. But I know I can find this pattern several times a week on a lower time frame, 1 minute, 5 minute chart. They're there all the time. They're there all the time. And that's a challenge for you. Go in and look for them. Look at how many times they form. Now, they're not all going to offer 50 pips. They're not all going to offer 30 pips. But if your minimum is getting 10 pips per trade, doing 1 for 1, because these people will go out here and say, you got to have 5 to 1, 3 to 1, or you have a negative expectancy and your system's going to fall apart. Man, that's assuming you suck. That's what that's assuming. Well, we don't suck here. Our logic is not flawed. It's precision oriented, and we know what we're looking for. So if that's the case, and we know what the market's likely to draw to, that's 80% of the battle right there. If you know what it's reaching for, entry patterns are easy. You get multiple ones. You get multiple entry patterns. I've taught you that. You don't need to have the perfect entry. You need to have the perfect understanding of where the draw on liquidity is going to be. Where's the market going? Why should it get there? What time should it get there? Those are the questions you should be asking yourself. That's it. That's the mystery that you need to solve for yourself. Because I promise you, if you get that under your belt, everything else becomes easier. But for whatever reason, your human mind, just like it was for me too, I wrestled with all these insignificant factors, these things that I felt were paramount for me to understand, or I can't succeed. I wasted years, folks. I wasted years, so many years, trying to worry about figuring out something that had absolutely no bearing on my success. The things I worried about early on, I don't even use that stuff anymore. Perfect example, Trader's Trinity. You got people here in the 2021 group making threads. Hey, could someone show me how to use the Trader's Trinity? Did you learn anything about the Trader's Trinity in this mentorship? If you're a chart member? Hell no, you didn't learn anything about that. It was just me introducing how I started breaking down the market from price swings to equilibrium, and every range could be divided in half, and then it was premium to discount. That's all the benefit of Trader's Trinity was for me. That's it. That's where it clicked for me, okay? So if you're worrying about or trying to apply Trader's Trinity, it's not useful beyond what I've taught you on a YouTube video. Remember, when I did YouTube, that was a social experiment for me. When I went on Baby Pips, that was a social experiment to see if I could produce another ICT the same way I came up. Nobody could do it. Now, I'm not saying I'm superhuman. It was just I wanted to see if I could create that. And it didn't happen. Nobody was able to figure out any model from the things I laid out there. So take that for whatever it's worth. It may not be worth anything to any of you, but it was just my curiosity to see if I could create a monster, Frankenstein monster, taking strangers with just the information I had in the order I received it. Would it create the same outcome I have with myself? And it never happened. And here we are, we're 11 years later. So if it was going to happen, it would have happened. But anyway, I could keep going on and on and on. Probably some of you are thinking, man, I wish you weren't so talkative now. It was better when you were doing those short videos, ICT. But just know that the benefit of releasing personal struggles that you're creating for yourself here, the ability to do that is a skill set that won't be fully appreciated until you get used to doing it. And what do I mean by that? Give yourself permission to not need to know right now. You're not going to know everything as fast as you want to know it. And warm up to that idea. And I promise, I swear to you, in every fiber of my being, I promise you, years from now, you're going to look back at the things that you were so obsessively worrying about that's held you back. You're holding it in your hands. I need to figure this out, and I'm going to crack this. And the whole time, you're wasting valuable development time that will probably answer that very thing you're worrying about right now by default. Because you're not obsessively worrying about it, you're allowing your brain to relax about that thing like a stone in your shoe. No matter what's going on, you could be dancing with your spouse. If there's a rock in your shoe, you can't enjoy that dance. You're not going to be thinking about the song and trying to remember that memory of this whole event. You're like, man, this damn thing's hurting my foot. I got to get it out of here. I got to stop dancing. So it's like that. And you really think about it, you're probably nodding your head thinking, it's disabling. It's like mental paralysis. And it makes you feel toxic towards me, towards the content, towards the concepts, because you feel like it's broken when you are placing the wall or barrier right in front of yourself. All you have to do is walk around it. It's like a prison cell. The door is closed, but it's not locked. You keep telling yourself it's locked. You just open it up and walk out. Go do something else in the mentorship. That thing that you're worried about probably is just stealing your development. And you're doing it to yourself. Everybody does it. Everybody does it. And it's just a matter of how long do you stay like that before you make a change and resume learning. That's the only thing I can do for you. I can't fix it for you. I'm just telling you what it took for me to change and what it's done for other people. And apply it to everything else in your life, not just here. If you're constantly worrying about something, the only thing that got me through the night before my surgery was reading. If I had placed my mind on something else, I couldn't be worrying about the fear of getting put under anesthesia. I wasn't worried about the pain. I wasn't worried about the swelling, which I knew was coming. Not as much as it did, but the only thing I could do is distract myself. And to the point where I couldn't hold my eyes open. And I got about 45 minutes of sleep the night before. If I wouldn't have read, I probably would have been a wreck. I can't tell you much about what I read, but at least I was distracting myself, for the time until my eyes got heavy enough for me at least get 45 minutes of sleep. Our brains are very powerful, folks. And that powerful brain can be an effective deterrent to you succeeding, or it could be used as a powerful engine to grasp on success and do it with an enjoyment, with a sense of accomplishment, and just appreciation if you do it right. And when I talk to you and I give you drills and exercises and things or approaches to doing this, I'm not trying to just fill up video time. I'm giving you things that I had personal experience with that were effective for me, that other students have used and it was effective for them. And it's worth trying them. Just like when I teach how to manage coping skills when you're having anxiety attacks. When you're in these trades and you eventually put live funds in, when you make that decision, you're gonna have an anxiety attack. Okay, it's gonna happen. You're gonna have a panic attack, and it's gonna feel like you're having a heart attack. It's gonna feel like you're having a stroke. It's gonna feel like you're gonna pass out, throw up, shit your pants. It's gonna feel like all that stuff. It's gonna feel like the world's closing in on you, and it's probably a $10 per pip trade that means absolutely nothing in terms of your whole entire career, but the outcome you've elevated it to, it's life or death. And you're gonna feel so silly 10 minutes after the panic attack passes. And you'll be questioning yourself, what the hell just happened to me? And some of you will question whether or not you're losing your mind. And here's where the kicker is. Some of you will look at that panic attack and it will paralyze you and you won't want to take another trade, even if the trade was profitable. I know that feeling intimately. So you don't know what you're going to deal with, and you have to take it as it comes. But knowing what you're looking for, this is what I look for. These are one of the patterns and why I like teaching Model 6 and Model 7 in this particular pattern. That stage of the market structure, that's the thing I'm trying to convey to you as a mentorship student. That's the thing that repeats all the time. It's always there. What do you think I'm talking about when I say every week, every day, and it won't stop? It's this. It's not order block. It's not breaker. It's not optimal trade entry. It's that right there. That's the thing. That's the thing that repeats every week, every day, and it will not stop. My challenge to you is start digging for it, looking at it. And then when you see it in hindsight, frame out why it took place on a higher time frame above the one you see it forming on. And then what does it look like in a higher time frame above that one? And you'll start to see this stuff and it'll start making sense to you because you're going in with an idea of studying for a particular pattern with a purpose. Why does this keep forming? What time is it forming? How much is the range it's reaching for? Well, if it's your entry here or here on redistribution, it's trading down here. Isn't that a respectable amount of range? That's 10, 20, 30, 40, 50, 60 pips from here. 70, 80, 90, 100 pips from up here. Like that's way beyond 50 to 75 weekly objective. So how do you look for these one shot, one kill, Michael, that offer that 50 to 75 pips? It's got to offer a draw on liquidity from where I think it's going to enter for a redistribution or distribution on the market maker sell model. If it offers that range of 50 to 75 pips, that's my one shot, one kill. Ooh, light bulbs. Oh, it's starting to fire now, ain't it? You don't need 50 to 75 pips. You might look at, say, a 5-minute chart, and it might be 2 or 3 25 pip setups where the draw on liquidity offers 25 to 35 pips. And because of spread, you get 20 to 25 pips. But if you find them a couple times a week, you can get your 50 to 75 pips that way. And I'm not trying to force you to just look for 50 to 75 pips. You can scale this to whatever you want it to be. You can use 4-hour charts and do swing trades, okay? And swing trades will give you a setup that allows for more than 75 pips. But it's still the same logic. It's still the same pattern. It's still the same part of that fractal, that element of a trade setup that repeats all the time. Every asset class, except for crypto. Okay? Anyway, it's a lot of boring talk. Let's get to the next business here. So on a 5-minute chart, I told you I'd give you some more detail about that market maker model. What makes this a level of redistribution? Because we took out this low, and then we retrace back up in. Institutional order flow here, bearish order block. Why, again, was this institutional order flow entry drill, and how was I able to know it beforehand and annotate it before it dropped off from there? Buy side imbalance, sell side inefficiency. Sell side imbalance, buy side inefficiency. So balanced price range, expect it as institutional order flow entry drill. Breaks down, bearish order block. I note that as it's happening, hits it, beautiful delivery. It's all hindsight, of course, that's what they'll say. And trades down to what? External range liquidity here. Then it digs in for internal range liquidity, high to low to high, optimal trade entry. This is a level of redistribution because it's part of a leg that's selling off to reach down to this liquidity down here. So if we dip down below this low here, why this low? Because that's the only low prior to this run up. This is market structure 101. This important low, high, lower low, retracement. This is going to be another level of redistribution. From this area in here, you can expect a sell-off to break below here and accelerate once it takes out this low to get down to liquidity on that daily chart or the original consolidate where sell-side liquidity resides. And look what happens. We go below it, we accelerate. Was there any retracements? None. Comes back up. Did it retrace all the way back to this old low like support resistance would be? Support broken, turns resistance? No. We have a fair value gap, trades back to the discount low, and then bang. Heavy, heavy, heavy selling. Not selling pressure, but selling by the algorithm. Selling off. It's offering the price rapidly at a real accelerated pace. Keeps repricing aggressively lower. Not because there's an increased amount of sellers. The increased amount of sellers ain't going to change any of that. The sellers came in here, and they came in here, and they were back here at the smart money reversal. This is just the algorithm giving the cookie to the interbank traders that were on the right side of the marketplace. Digs into it shallow, retraces back up in, consequent encroachment, sell side imbalance, buy side inefficiency, then does what? A deeper run below here. So this would be running down equity. Every time it creates in low and runs below it, partials, partials, partials. Okay? All this stuff fits together. It all comes together if you have the complete material understood. Then it makes sense. Otherwise, if you don't have it, you have your favorite little thing, the breaker, or the order block, or the optimal trade entry, or now the buy side imbalance, sell side efficiency, or the institutional order flow entry drill, the fair value gap. Whatever one that you gravitate to, that's going to be your entry pattern. But that's not the logic. That's just the thing, the mechanism that gets you in a trade. But you have to have all the narrative around that, or it's not going to work for you. Every little separation between two candles isn't necessarily a fair value gap. Okay, just like every up candle is not a bearish order block to sell short from. You have to have context. You have to have a narrative around what it is you're expecting, and that only comes from having a comprehensive understanding of everything I teach you over an entire calendar year. And I'll walk you through, and I'll show you what to expect, what to avoid. It's probably going to be high risk right now. You don't like to hear that because that means we're doing nothing. But doing nothing is something profitable, always. You're not gambling. You need to know that without going through a full calendar year, you cannot see those things. You can't appreciate it, you can't learn from it, and you can't build experience around it so that way you can navigate on your own without me. That's why I teach this way. I don't teach you dependence on me. Okay, if I wanted dependence, I would give you trades and offer monthly payments in perpetuity. And who knows how much money I'd earn from that. I don't want that because it creates codependency. And I had a student that just emailed me, and I believe, if I'm not mistaken, it's a 2021 group member. He stated that the time away because of my surgery and not being able to talk and pain and all that crap, he was surprised to feel what it felt like not having me talk and encourage and place the right perception on the current market environment. He felt disjointed, and how unnerving it was to feel that. And that's why I teach the way I do, because I give you just enough to go in with a hint of what it's likely to do, and you go in and you work out your own framework between where it is when we do the commentary and where the market is reaching for. So that allows each of you to go in with your preferred entry, your own trade management, and develop your own model as a result. Because I can't force you all in to one mold, and that won't happen. If it was possible, every one of you would have the same results, and you don't. And you would never get the same results. No one ever. No matter what they sell, whatever they teach, whatever they promote, nobody is going to create students that have identical results. They're going to be different in their entry. They're going to be different in their partial, if they take partials at all. They're going to be entering and exiting at the different price, and it's never going to line up. So you have to welcome that and embrace the fact that you're going to be individually unique, and that's a wonderful thing. But you have to do that work to figure out what it is that you're comfortable with, because the variables are so infinite. I cannot sit down with a community this large and help you individually do this discovery, okay? I give you skills, drills, and exercises and lessons to help you determine what that is for yourself. If you apply yourself diligently, if you don't do that, you're not going to get it, okay? And it's not because of a lack of trying. It's not a lack of me not giving you what you require, because you've already got way more. Month 1 is enough. YouTube was enough. But I keep pouring on more details for precision, and you're struggling on things that probably are not as paramount to you as you've made them out to be. And that, again, just take your shoe off, remove that rock, so you can keep walking forward into the next content. All right, finally, good grief, we got off that British pound chart. NASDAQ 100. All right, so we came down and closed in all of the pot sign, balance, sell sign, and efficiency. Went a little bit deeper in here, down to this indecisive candle here. And we came up, filled in this small little gap, and I personally think that the likelihood is we could potentially trade higher. I'm not trying to pick a top, as I mentioned when we were doing this idea, going short last week. That trying to pick a top is stupid. We've never been here before. This doesn't necessarily mean that we've topped. And I think this imbalance, which we'll see on the hourly chart here, that's this imbalance here. I did not extend it out in time, but you should have it on your chart here. If we trade up to it here and sell off, as long as we're below this, we have a potential to go lower. I don't favor that. I'm favoring the higher time frame bullishness. I personally believe that if we get above it, which I'm expecting this week, if we get above it and come back down into this range, act as support, then we could see a run into that 16,500 level and maybe even higher than that. In other words, running above this low resistance liquidity run signature here with the lower high here to that. A lot of folks are looking at this as the top of the marketplace. There's a lot of channels I like listening to that are not technical channels. They're just like the average mom and pop type channels, real small type things that, are really of no importance. There's personal haunts that I've gone to and I've looked at over the years, and these aren't traders. These are people that say, "Oh yeah, the stock market's getting ready to crash." They've been saying it's going to crash since September. Okay. So I'm laughing because you all know that that's when we're looking for the seasonal low to form between September and November. Oh, it's last week of August to the first week of November or thereabouts. So somewhere inside that area of time, we look for a seasonal low. Yes, there's a technical likelihood of a sell-off when it's bearish. We're not in a bearish market. They keep sending these stocks higher into levels that are unrealistic and they're unwarranted. But as long as the trend is what it is, you got to keep taking the buy signals and trusting it. And that's the hard thing to do, especially when you're in levels like this where I get so many people that are outside the mentorship and inside the mentorship asking, where do I think these indices are going to go? I don't know. Who the hell would know that? Nobody. There's no way to formulate that except for like taking this low to that high and projecting your fib extensions on that. That's all I can do, and that's how I did. That's how I did the levels on Bitcoin, and it just happened to work pretty good. Not perfectly. I mean, they went like 2,000 points below it, but it struggled at 62,000. Then recently, last week, it pumped up and made a slightly higher high, but it's struggling to hold under those highs. I would have liked to see it continue higher. So we might be seeing some kind of intermediate term high forming on Bitcoin, just as an added benefit and extra charge. Again, I'm not a crypto guy. I'm not right a lot with that. So bear that in mind. I'm not trying to tell you what to do with your crypto, but I think personally this framework here warrants the expectation of a higher high. And until proven otherwise, what's the line in the sand? This imbalance. We might be just coming back up here. And if it rolls over, then we'll be looking for a run below that low there. But I personally would expect NASDAQ to go higher and obviously the other indices making higher highs. We're bullish as long as the averages confirm one another and they're making higher highs together. So we're getting ready to go into December. Do we get the Santa Claus rally that typically takes place when bullish markets are in force? That means the last little bit of market activity for the year, it just tends to rally into the last few days of the year. I believe that's going to be the case, especially if we get above these highs and really start to spread, with a lot of volatility. I would prefer and expect also a high forming if it goes parabolic. And what do I mean by that? Let's assume for a moment, and we're done with this video. Let's assume that we trade above this high, okay? And we do so with 4 to 6 huge range days that are up closing on the daily chart. That's parabolic. That means they're just rushing to deliver the highest premium they can. That right there would be suspect to me. And if I owned stocks that were seeing really exorbitant price moves in my favor, I would be dumping them in that type of move. Because that type of move is parabolic. That type of move is typical of a top forming. I don't see any of that in here. Okay, so to me, this looks like it's just retracing, correcting. I even told you last week that a down close or even two is constructive for the overall uptrend. It just allows the market to go down to a short-term discount, pick up more liquidity. It's interesting how they went down to that small little fair value gap there. Boom. Now we've rallied up. I'm expecting your focus, like mine, is here. Until proven otherwise, that's what I'm looking for NASDAQ 100 for the week. And obviously the Dow and even the S&P. So that's going to be it. I gave you a long one. And yes, my mouth is hurting. And I'm probably going to be regretting it tomorrow. But anyway, just as a reminder real quick, thank you again very much for all of your patience, allowing me to get through this surgery and still going through the healing process. For some of you that think you've been stealing for the last couple of days, and some of you have not made your payment. And to be fair, I told my staff not to remove you for non-payment because I was unable to deliver like I normally do. You didn't force this on me. It was a surgery that was elective, and I thought that I was going to be able to deliver content, a day or two after that, and I was obviously not able to. And you can hear the way I'm talking because I have these big plastic things in my mouth, and it's very difficult to talk. I'm getting to that point where I can talk a little bit better now, but you pay for content and you pay for lessons. I've not been able to do what you pay me for the last week and a half or so. So because of that, and because you didn't make your payment, I'm giving that extra time to those individuals that didn't make their payment. I know some of you emailed our staff and said that you're probably not going to be able to make the payment, until the last few days of the month. That's normal. That's usually what happens with everyone. But I'm giving this till next Friday. If you obviously haven't made your payment for November by next Friday, in all fairness, I will ask the staff to take you out of the mentorship until you make your payment, but you would have to make it by December 1st to avoid being removed. Okay. I think that's fair. I think that's fair on both sides because, again, you paid, and I was unable to, not unwilling, unable to. I physically couldn't do it. So because of that, and it's something I put on myself. It wasn't like I got sick. Like I did this to myself for improvement, and I couldn't meet that expectation that I placed in terms of what you would reasonably receive from me. So that's the reason why you didn't get thrown out yet. Okay, we didn't forget you. You didn't slip through the cracks. It's just a matter of I want to be fair. And some of you said that you can't make the payment and you don't know when you're going to make the payment again because of your personal circumstances. You still are going to be allowed here till next Friday. But again, if you don't make the payment by next Friday, on Saturday of next week, and we will remove anyone that didn't make their November payment. Okay. So again, it was a gesture on my part to try to fill in that void that I was unable to meet as your mentor because you paid, and now I'm giving that back in terms of the time for those individuals that didn't make that. For everyone else that did make their payment, thank you very much. I don't really know what to say. I can't give you anything extra because obviously you're already here and you're meeting the obligations that were expected of you. It was just my shortcomings because of not being able to meet the demand that I would normally have because of the impediment of not being able to do anything really, not sleep, not eat, not anything. It's been a mess, but I'm improving, praise God. And hopefully we'll be back into the groove of things on Monday. And until I talk to you then, enjoy your weekend and be safe.